Generally, an S corporation uses Form 1120-S to compute and report corporate income and expense items to the IRS. In most cases, the tax forms used by an S corporation are for informational purposes, similar to partnership tax returns. All tax items are then separately reported to each shareholder so that they can then report this tax information on their individual income tax returns. By close inspection, you'll note that there are more similarities between the partnership and S corporation returns, namely Forms 1065 and 1120-S, than there are differences. Although some of the individual lines vary, the sections are the same. Form 1120-S is supported by several different specific schedules. These schedules are very similar to those used for partnerships and C corporations. Form 1125-A captures information about cost of goods sold and inventory valuation, if that is relevant. The rules for cost of goods sold and S corporation inventory are no different than for other business forms. The IRS uses Schedule B to ensure compliance in many different areas of corporate tax law. Some questions on Schedule B are common issues for small corporations, and others, for larger or more complex corporations, may never apply to your clients. Nevertheless, every question must be answered. Schedule K is a summary of all S corporation tax items and is a link between Form 1120-S and the shareholder's proportional share on Schedules K1. Their share is based on the percentage of shares they own. Each shareholder will receive his own Schedule K1 with their share of the income or loss numbers, which they will then transfer to their own individual tax returns. This figure needs to be reported on their tax return whether or not a distribution was actually received. Ensure that each shareholder gets their Form K1 in a timely manner. The more common types of tax items have specific lines on Schedules K and K1. The less common items are grouped together under one title but are identified by an assigned code to reduce the size of the forms and the reporting burden. Many items require additional information, such as a statement of explanation or an itemized list. It is very important that Schedule K and Schedule K1 be filled out properly. Having said that, it's quite common to have only one or two tax items identified in the K1, the most common being the line for ordinary business income or loss. In Part 2 of Schedule K1, you must report general information about the individual shareholders. If the corporation has only one or two shareholders and their percentage of ownership does not change throughout the tax year, the allocation is simple and the percentage remains constant from year to year. It is multiplied by the amounts reported on Schedule K to determine the pro rata share of each shareholder reported on Schedule K1. If there was a change in shareholders or in the percentage of stock ownership throughout the year, the allocation process may be complicated. According to the Internal Revenue Code, each pass-through item is first divided by the number of days in the tax year, and then that amount is allocated equally among the shareholders who held shares on each day. A simplified method can be used determining the percentage of ownership for each shareholder and applying a weighted number of days in the tax year for the amount of time the stock was owned. On the date of transfer, the transferor, not the transferee, is considered to own the stock. So, if at mid-year a 50% shareholder sells all of his stock to a new shareholder, then it can be assumed that the sales and expenses occurred evenly throughout the year, and each shareholder reports 50% of their 50% share. As with the partnership and C corporation returns, Schedule L is a statement of the corporation's financial position or balance sheet. The IRS requires Schedule L to be completed unless an exception applies, and the figures must agree with the corporation's books and records. The most common reason you won't be required to complete Schedule L, and M1 for that matter, is if the corporation has gross receipts less than $250,000 and assets less than $250,000. Even if you do not have to complete Schedule L in order to arrive at taxable income, corporations are still required to maintain records detailing balance sheet accounts. By preparing Schedule L anyway, the corporation benefits because its accounting will likely be more accurate when balance sheets are maintained. Later, when receipts and assets reach the point where Schedule L is required, it will be easier to prepare it. I would encourage you to advise all your clients to have a current balance sheet and income statement for their business. For similar reasons, I suggest that you always complete Schedule M1, which is the income reconciliation between books and tax, whether exempted or not. An S corporation uses Schedule M2 to account for undistributed net income using 3 separate accounts. One account, Analysis of Accumulated Adjustments, tracks the amount of undistributed earnings that can be distributed to shareholders tax-free. Another account, Other Adjustments account, tracks other items not included in the analysis of accumulated adjustments that must be accounted for when tracking basis. This is very unusual. The last account, Previously Taxed Income, a seldom used account, tracks undistributed earnings for tax years before 1983 under the old rules before analysis of accumulated adjustments. This schedule becomes important only if the S corporation had earnings as a C corporation before electing to become an S corporation. Since most S corporations filed the election at the time of incorporation, Schedule M2 is unnecessary and may be left blank in most cases. However, if in that rare occasion you complete the tax return for a corporation that began and operated as a C corporation, you will need to track your S corporation earnings using Schedule M2. Let me summarize for a moment. There are many similarities in the partnership, C corporation, and S corporation tax return forms. However, there are enough differences that you must be prepared for the adjustments among the 3 different returns. The task of completing the more complex business returns may seem challenging to you as you start, but the resources you have from Universal Accounting Center will guide you through the process, and the IRS website provides additional information you might need to complete any type of tax return that comes to you.